So our last lesson, we started talking about various forms of retirement income. We were talking a lot about the retirement income that's reported on our 1099-Rs. So, pensions, annuities, IRA distributions, and we briefly mentioned about railroad benefits. That Tier 2 would be treated in a similar fashion to those, but you would need to have advanced certification. So in this lesson, we're going to talk about Social Security benefits, and we briefly touched on our last lesson that railroad benefits that are Tier 1, which is going to be a blue form, are treated the same as our Social Security benefits. So generally speaking, if the taxpayer's only income is Social Security, then it is excluded from taxable income. And in that case, the taxpayer would not be required to file a return. However, if the taxpayer, and this includes the spouse as well, had other income, up to 85% of their Social Security income might be taxable. So if we're looking at our Form 13614C, our intake form, you'll be seeing, hopefully check yes in line 13 for Social Security or railroad benefits from, Tier 1. And then we just need to be watching for, is there other income sources? Real commonly, you're going to see, a retirement income or interest and dividends from a brokerage account. You might even see some wages or salary. And then along with that, our client will be bringing us Form 1099 SSA. And here is what it looks like. The boxes that we enter are boxes 5 and box 6. Box 5 is the net benefits and box 6 is the federal withholdings. We want to make sure that if they did have withholdings from this, that those get entered. A lot of times there were no withholdings, but always check. And then box 3 is really important. It gives us some other information that often does end up on the return for a variety of reasons, and we're going to talk about some of those in a little bit. So when our clients come in with Form 1099 SSA, we're going to want to do a real quick calculation to figure out if some of this is going to be taxable. And in large part, this is because we want to find out if our taxpayer has a filing requirement. But it's also helpful to know because we might need to be explaining to our taxpayer why some is or is not taxable. So to do this, we're going to add up all the amounts in Form 1099 SSA Box 5. Remember, if you have a spousal situation, that's going to be both spouses. And you're going to multiply those Box 5s by 50%. Then you're going to add up all of their other taxable income. And then you're going to also add in tax-exempt interest. Remember when we had our lesson, our first income lesson, we talked about it's really important to make sure that you've reported tax-exempt interest because it's going to affect how much of the Social Security income is taxable. So we add up all of those income sources, and then we're going to compare the sum of that to a base amount, and that's going to be based on filing status. So let's head there next. Here are the base amounts. So if we've added up those 50% of Social Security benefits and taxable income and tax interest, if it's more than $25,000 and our taxpayer is filing as single, head of household, or qualifying widow, then they will have a portion of their Social Security will be taxable. If the sum of their 50% of their Social Security and taxable income and tax-exempt interest is less than that, then their Social Security is not going to be taxable. The other filing situation where we have a $25,000 base amount is for married filing separate and the taxpayer lived apart from their spouse. So that's really important to remember that whether they lived with or without their spouse is going to have a big effect on what the base amount is and how the Social Security will be taxed at what rate. For a married filing joint couple, you're going to have a base amount of $32,000, and then here again, married filing separate and they lived together, the base amount is 0. That means that they're going to be paying some tax on the Social Security income, and it's going to be 85%. So after we know that at least some of the Social Security is going to be taxable, Worksheet 1 from publication 915 helps determine how much will be taxable. Now you don't have to put in any extra inputs. TaxSlayer auto-generates this when it's needed. But it's good to know that it's there, because if you ever get to the end of a return or you're providing the second set of eyes for your client who's done the inputs as a facilitated self-assist, and there's ever a question about, why is the Social Security taxable or not taxable, then you can go into the preview function and look at this worksheet and find out how that calculation was made. And here's how the Social Security benefits flow onto the Form 1040. Again, we have our line 6, which is split into 2 pieces, as many of the lines that we've been talking about before have been split into 2 pieces, where you have the non-taxable amount and the taxable amount. So in this case, line 6A covers the whole Social Security benefit, and then 6B is just the taxable amount. Now, as I mentioned a few slides back, we have this box 3 that has descriptions of various other things like Medicare benefits, and also it has a little extra explanation if our taxpayer got a lump sum, and that's included in box 5. So usually this maybe is that they were applying for Social Security and maybe they were getting denied, and then they finally were able to apply and get approved, and they were owed an extra amount for that time in which they were getting denied, and so that would be paid out in a lump sum. And sometimes that's paid out in the current year, for the current year, and sometimes it includes some prior years, a lump sum amount for some prior years, in which case we have a couple of options. Our taxpayers can choose to report the entire payment in the year it was received. However, if they have other income and some of their Social Security benefits are going to be taxable, they may be in a better position to treat the benefits as if they were received in the earlier year or years if it lowers the taxable portion of their benefits. It's important to note that when we do this, we are not going to be amending any prior returns. There's a calculation we're going to do, and it figures out the taxable portion that's left, and that gets just reported on the current year returns. So no amendments. If our taxpayer wants to make this lump sum election, then we're going to need to ensure that they have brought in the prior year returns with them, so that we can look and see whether they had taxable Social Security benefits in those prior years, and how much did they pay and report on that. And then we're also going to need to select the lump sum worksheet button. It's at the bottom of the SSA 1099 input screen. And then there's some instructions in Publication 4012 on how to fill out that worksheet, and it will do the calculation to figure out, how much of this lump sum payment is going to be taxable.